Hello, everyone. Welcome to today's session on best practices for a global Vertex implementation. Thank you so much for joining us. My name is Scott Sunday with Vertex, and I'll be your host and moderator today. Before we get started, just a bit of general housekeeping to review. First, please keep your audio muted to avoid background noise. And on your presentation console, the Q&A button will allow you to submit questions. Feel free to post any questions here, and we'll get to them during the Q&A portion after the presentation. The resource list contains additional info about Vertex, Grant Thornton, and our partnership. You'll see two buttons for call to action and request demo. So for anyone interested in additional information or to speak to Vertex afterwards, just click those links and follow the on-screen instructions. After the webinar, a short survey will appear on the screen. Your feedback is valuable for future webinars, and all survey respondents will be entered to win a $50 gift card. A link to access the recording of today's presentation will be available in coming days and emailed to everyone that registered. So in terms of CPE credit, today's session is accredited for 1 hour of CPE. Vertex Inc. is registered with the National Association of State Boards of Accountancy as a sponsor of continuing professional education on the National Registry of CPE sponsors. State boards of accountancy have final authority on the acceptance of individual courses for CPE credit. Any complaints regarding registered sponsors may be submitted to the National Registry of CPE sponsors through its website. So to obtain a CPE, you have to remain on the live webinar for a minimum of 50 minutes and answer at least 3 of the 4 poll questions. Polls will appear throughout the presentation, so just make sure to submit your answers by clicking on the response options displayed on your screen. You'll see an Apple CPE icon on your attendee console. After you complete the CPE requirements, click the Apple icon on the console, and from here you'll be able to view and print your certificate. So let's go ahead and get started. I'm pleased to introduce our expert speakers today. Vince Marasco, Director of Product Management, Ray Visa, Managing Director, Tax Digital Consulting, Enterprise Tax Automation, Grant Thornton, and Jason Davenport, Director of Tax Digital Consulting, Enterprise Tax Automation, Grant Thornton. Guys, welcome to the webinar, and thanks for being here with us today.
Thanks for having us.
Let's get in. Of course.
Thanks for having us.
Yeah, let's get right into it. So let's get down to our first discussion question. So let's talk a little bit about ongoing complexity around indirect tax. Can you discuss some factors that have made indirect tax compliance even more challenging than ever?
So, why don't I kick us off there with that topic, and then anybody else can feel free to jump in with your perspectives. But, from what I'm seeing, I think one of the major areas that has changed really, and it's, to a certain extent, there's always been rate and rule complexity that you have to manage. But these days, I think there really is a tremendous amount of rates and rules and real complexity on how you manage those rules. And the other part of it is the velocity of changes. We are seeing rapid fire changes in legislation, lots of new rules coming out at the local level. Certain jurisdictions, especially, outside of the United States, I just have a tremendous amount of new rule volume happening all the time. So managing that complexity, I think, is a really, really tricky part of managing indirect tax, especially on the front end calculation. Is what processes are you going to put in place to manage all of those rates, rules, and the changes to those rates and rules, especially without a tax engine. Things are different if you're using a tax automation solution. But I think if you're trying to manage that on your own, that is one of the key pieces of complexity that are difficult to manage, is the volume and the velocity of rate and rule changes across the United States and globally. The other part that I think is actually equally important and equally challenging is how you actually manage that within your financial system. So oftentimes financial systems aren't really designed with tax in mind. They're designed with accounting in mind. And so supporting complex tax management inside of a financial system that wasn't truly designed for tax can be equally challenging as just as much as getting the rate and the rule data. And I think another thing that really pops up in my mind is really that end-to-end tax process. There's more to tax than calculation. There's the compliance and the reporting. And that is also getting way more complicated now with new requirements like e-invoicing, which are really changing what that calc to compliance process looks like. And there's other things. I'll actually open it up with for Jason and Ray to maybe jump in and share some of your thinking on that as well.
Yeah, absolutely. I mean, I think I kind of hit it right on the head. I mean, we know that, the rules they're constantly changing all the time on the global level. We see companies continue to, always acquire new companies or expand their global footprint. It's the more countries that you're in, and as you continue to expand in really the different industries that you're in, just creates more and more complex rules and areas that you really need to, really deal with. Now, you have a lot of the jurisdictions today's day and age too, like on the global scale, like e-invoicing is a real hot topic, and having the real-time filing, real-time reporting, and that just continues to expand. A lot of our global clients are implementing, these softwares to help drive a lot of that piece, and it just continues to get more and more challenging, right? So, do you have like a mixture of like B2B, a mixture of B2C, supplies that need, valid registrations, having a system to kind of help maintain that. There's obviously complex place of supply rules and difficulty identifying like taxable status. So we see a lot of different things with like, depending on the issue, like domestic reverse charge, recoverability of these different VAT scenarios. As you continue to expand in these different countries, they just continue to get more complicated. Even on, you have a translation of like data files as well, like just on the compliance side as well. So there's countries like Sweden, Poland that have like different types of reports that you have to file with these different countries, right? There's like the China golden tax system. The list really just goes on, and it just continues to get more and more complicated. The more ERP, more billing systems that you have, et cetera. So.
Yeah, and I think the other thing to consider is, trying to solve for tax natively in your ERP puts you in a position where you're very reactive to change. A lot of the time you're compensating by putting more manual effort or assigning more resources, to maintaining a task that's mainly manual, not very flexible, not very responsive to change. So that's where we see companies have a lot of challenges in the current state to try and solve taxation within their native ERP. And typically, if you don't have any automation, you're either assigning way more resources than what's needed, both from a tax, ARAP, and master data standpoint, and or you're having somebody review all of your invoices, which can be very expensive because typically those type of tasks are outsourced to consultants.
That's great. Thank you, guys. Thanks, Ray, Jason, and Vince. Anything else to add on this topic, or should we move along to the next question?
Yeah, we can keep moving.
Yeah, sounds good. Okay, great. Ray, you just kind of touched on this a little bit, but let's talk some more about native ERP functionality. Can you explain a little more about some of the challenges that clients face in the global space, using those?
Yeah, I can kick this one off. I think what we see a lot with just the native ERP functionality is truly just the actual limitations, right? So they have like functionality might be specifically focused around like, kind of like maybe GL accounting. They don't have that broad rate and rule content that's truly required to be tax compliant in the variety of the different countries, right? So, you have typical ERP is going to have some standard rudimentary rate tables that have to get updated. It's challenging to deal with, consistently complex rules because it's just not built for that, right? There's just not the content behind these rate rules. You have somebody consistently going into, the system to make updates as you continue to expand your global footprint. It just continues to exacerbate itself and get even more and more complicated. You know, the other challenges that we see too is within the standard ERP functionality is, you know, a lot of these ERPs can be customized, and not having you know, an appropriate tax engine to really manage that content, it gets more and more challenging, right? So especially like with like upgrades to the system, it can disrupt like the various different customizations that you might have. And then every time you know, expand or even something changes within like a given country, then your IT resources get brought into the mix because they're busy, you know, maintaining a lot of those customizations within the actual application itself, right? Versus having something that's more of a managed content for you, where those rate rules and content's done automatically. You know, it's the other challenges that we see too, especially like on the reporting side as well. So you're really kind of limited to the type of reporting that you can get out of that standard ERP, and it might not be compliant enough for you to more or less stay in compliant. And in order for you to stay in compliant, you're going to leverage a lot of internal resources to customize different reporting, and it takes up a lot of resources from your, you know, whether it's your IT team or tax team versus working on more of those like value added activities. The other challenges I see too, just on ERP functionality, is really just around like the different CITES rules and content. So if you're doing different cross-border type transactions, the CITES can be extremely difficult from using just the standard ERP functionality as well. The maintenance of, you know, the functionality within ERP2 is just very, very time consuming as well.
Yeah, and a couple other things in that vein. If you're set up manually and spending your time maintaining it, you're going to miss a lot of the changes, the regime changes, the rule changes. And when you are in front of them, sometimes you're going to have to be very flexible around what needs to be done, which isn't typically compatible with native ERP functionality. So for example, Brexit, you know, there was a date, the date got rolled back, the date got put on again, it got rolled back again. A lot of the companies I work with that tried to do this manually in the ERP, it was a huge lift. They were making changes, undoing the changes, and just a lot of development work that, you know, in a tax engine like Vertex is just rules becoming active and being deactivated. It happens more seamlessly, and it's going to be data driven by your transactions. The other thing too is we're talking about native ERP functionality to help, you know, get reporting for tax. What if the company has 10 different ERP systems? Having a tax engine will help you to centralize that information so that you have a sole source of reporting, which will make your compliance process much more seamless.
Ray, one thing I jump in there with, maybe feel free to augment this a little bit with your own thinking, but I feel like, you know, when you're trying to do everything inside of your ERP as well, and you're not using a tax engine, you're going to get yourself into a spot where, you know, you're actually limiting your ability to grow your business because tax is starting to become a barrier to business versus something that can easily adapt to a changing business environment. And I think you and Jason kind of hit the nail on the head a little bit, that if you're spending a ton of your technology effort and your technology capacity on making core changes to your ERP to support tax, you're using those resources to drive tax instead of using them to drive the business. Anything you could add to that? Maybe give a little more color to that?
No, I mean, I think you summed that up pretty well. You know, the ERP is just not the way to do tax, especially globally. It's bad enough to try and do it in the US, but when you think about globally and all the resources you'll need, both local tax and technology, it's just going to be very expensive and inefficient.
Thanks, guys. Yeah, it sounds like from what we're saying that it's just really, really challenging for a human to be able to manage all those different changing jurisdictions around the world and all that complexity, like you said, within the native ERP functionality. So that's a good discussion. So let's go into our first poll question. While we're talking about automation, like to know if everyone could answer which functions are currently automated at your organization. So is it maybe sales, purchasing, compliance, calc and compliance, all the above, maybe none of these? So yeah, we'll give everyone a moment or two to put your answers in. Don't forget, for those looking for the CPE credit, we need you to answer 3 of the 4 polls. So in a minute or so here, we'll go over and see what everyone responded. All right, so I don't know if everyone can see these results. I think we can. It looks like people are saying, most people said either all of the above are automated or none. And then a few folks said calc and compliance. So that's interesting. Any comments on these poll results, guys?
I think for large companies, that would be, what you would expect to see. So typically, smaller companies may just be automated on the sales side, and most companies will have some kind of solution for compliance, whether it's in-house or a third party. As companies start to get, into the billions of revenue and large globals, that's where you'll see a lot more automation on the purchasing side as well.
Gotcha. Excellent. All right, let's move over into our next discussion question. So in terms of using a third-party tax engine, what are some of the main benefits from automating tax? And also, as the second part of this, is there any particular time that's best for businesses to consider a digital tax transformation effort?
It's a great question. I think if you look at it, and we've touched on this a little bit already, but one of the main benefits you're going to get from automating tax using a third-party tax engine is, one, you're not going to have to take your valuable resources and dedicate them to rate and rule research, right? You're able to actually use a dedicated third-party system that gets automatic updates of rate and rule content, and that no longer becomes something you have to manage. And I think that's huge, right? Because it allows your tax team to focus on doing things that deliver a differentiated value to the org overall. So things like improving your tax position overall, doing tax planning, tax strategy, and enabling different parts of the business to grow using tax as kind of the bedrock of that growth versus doing rate and rule research. So I think that's an instant benefit that you get by leveraging a third-party tax engine. The other, I think, part that really does dovetail well into some of the earlier discussion as well is the fact that when you're using a third-party tax engine, you don't have to put any real type of tax customization into your financial system. So as data flows through your financial systems, transaction data, I should say, and it can either be on the supply side or the procurement side or through e-commerce or a purchasing system or whatever it may be, but all of those transactions can get taxed centrally with the tax engine, which means you're managing your tax setup in one place. And regardless of what system is generating the transactions, be it an online e-com tool or an internal ERP, whatever it may be, you can send all of that transaction data into one thing for tax calculation. So that gives the tax team really fine-tuned control over how tax is managed, how tax is calculated, and it presents an identical tax experience regardless of where the transaction is coming from. So not only do you no longer have to work on maintaining rate and rule data on your own, but you're also able to have very fine-tuned control over the tax experience, regardless of the financial system that's generating the transaction. In my mind, those are 2 really huge benefits. The other part that I think is important is when you're using a tax engine from a third party like Vertex, there are other tools that Vertex can bring to bear to support your end-to-end tax process. So you're not using things in a disintegrated manner. You're able to go from calc to compliance to analytics and insights and reporting, all with one integrated tool set. So it supports that full end-to-end tax lifecycle much more effectively than if you're trying to build all of those solutions on your own with native ERP capabilities. So I think when you look at it, not only are you getting automation, you're getting automatic updates of rate and rule content, you're getting a standardized control over the tax experience, but there are also complementary tools that support that end-to-end lifecycle. In my mind, this is really these are really some of the most critical benefits that you're going to get when you use a third-party tool set to help manage your tax processes.
Yeah, I agree. I'll just chime in here a little bit too. Those are all fantastic points. I think the other, to add a little bit to that too, is that, we talked about just having that control in general within the tax department as well, but it really helps automate that overall compliance process on a global scale as well as having the information that you need to defend against the various audits that you will have to deal with as you continue to grow your business. And I know earlier in the presentation is where we kind of talked about like speed to market. And as we kind of get into that global economy, we see more and more companies expanding, whether it's from the US globally, but we also see the reverse. We see companies that maybe started in the UK or in China or other countries are now starting to expand their footprint into the US. And having that integrated tax solution allows you to get there much quicker.
Yeah, and if I think of, if I could sum up three main benefits, it would be reducing risk, it would be reducing manual hours, and it would be finding savings within the tax function would be the three key benefits of using an automated tax engine.
Thank you, Ray, and Vince and Jason. That was good. So in terms of like the second part of this question, it sounds like we covered off on the benefits of automation with a third party. Any thoughts on like the best time for businesses to consider a project like this? Is there a best time?
So it really depends on, what your IT roadmap looks like. So anytime you're moving or upgrading an ERP, you should always look at what your tax solution is going to be. Do you have something that needs to be upgraded as well? Do you not have anything, and would this vastly improve the way you manage tax? Also, there could be events that will convince you that you do need a tax engine now, even if there is no system change. So I think of, poor audit results. I think of an abundance of customer complaints. When we talk about the purchasing side, a lot of times we'll see a company identify a large amount of overpayments or under accruals, or just incorrect reporting for invoices that would cause them to say, okay, well, a tax engine license plus an implementation is going to cost X. I just had to pay a lot more than that out on penalties. So that really makes a case for itself as far as justifying a tax engine.
Excellent. Mm-hmm. All right. Going to go ahead and move us into our next question. So, just as we keep talking about automation and, why to automate, how to do it, any tips or suggestions on how to build a business case to bring in automation? How can customers secure buy-in from the necessary stakeholders to do a project like this?
Yeah, so I think one of the key things is just making sure that you have a presentation that's focused on ROI. So going back to the three things I highlighted on the previous question, so reducing risk, talking about having cleaner audits, not having to take hits to the income statement. Those would be a lot of the areas, and just being able to follow the tax law. So, I mean, there's a huge risk to customers. There's a huge risk if you're a publicly traded company and not following the tax laws. And then when we talk about saving time, actually estimate the hours that you'll be saving on a monthly basis. One, that allows your team to focus on making sure everything's running efficiently and not, manually moving data here and there or manually making decisions on transactions. That also increases the quality of life and helps with employee retention. And then when we talk about, I think the easiest sell would be, where can we save some money in the tax department? Well, paying to customize and enhance and customize and manually configure a lot of tax solutions in one ERP or multiple ERPs, that can be very costly, especially when I mentioned previously, having companies review all of your invoices or some of the things you have to do on the back end because you don't have any upstream solutions. Putting that cost on paper versus, okay, here's what the tax engine is going to cost. Typically in that ROI calculation, you'll find that the tax engine plus the implementation pays for itself, within the first few years. And it also puts you in a really great position to future-proof what you're doing. Because if we think of things like, Brexit on the European side, Wayfair on the U.S. side, or even if we go back, 6 or so years in the India tax regime change, those were all things that were very, very challenging to handle if you did not have a tax engine. So in order to get the buy-in, I would look at this as it's not really a nice to have. You have to follow the tax law and then just be able to spell out, how it's going to save time, how it's going to help you manage risk, and how it's going to identify some areas of savings versus what you're doing today.
I would think too, for smaller businesses, being able to build that business case would, something they would want to mention is being able to scale for growth. And it sounds like, from what we said earlier, to use a native ERP might not be the best resource for that kind of strategy.
Yeah, I mean, I think, that's definitely something that is very accurate. When you're using a tax engine that's tailor-built to manage tax, right? You can typically rapidly add new rate and rule content as needed to that tax engine that lets you sell more things in more places through more ecosystems without major barriers. And I think that's got to be part of the ROI equation, is how rapidly can you grow your business without running into challenges that create friction for the business that are solely related to the tax management aspect of selling. I think that's a huge, that's an often overlooked ROI element, is the ease of expansion and the removal of friction from growing your business. The other part that I think Ray hit on that I'll spend another moment on here is on the procurement side. So if you use a tax engine to reevaluate your purchases, it's not uncommon for organizations to find out that on certain invoices they were overpaying tax. So, being able to avoid that as just par for the course on the procurement side of your business is another direct impact on the bottom line by avoiding tax overpayments. And that's also another area where there's some ROI opportunities that are often not really fully visible or on top of mind, is avoiding tax overpayments as part of the procurement process. So I think when you work that into your ROI model for justifying the business case for making a tax automation decision, it starts to actually build a compelling business case for why this is going to not just be a cost down measure and a day-to-day life simplifier, so to speak, but also something that can materially reduce your bottom line costs and help you grow your business.
Yeah, Vince, that's a great point. And, on the over and underpayment of taxes, I think something else that's important is just in addition to that money, it's also a big time investment for people to spend trying to track that down and just to get the money back or to reconcile those kinds of payments. I've heard different stories about how that in itself can be an issue on top of, the money that's being recouped. So definitely important points. So let's move into our next discussion question. So I guess this question would be for Ray and for Jason. So can you share an example of a really successful Vertex implementation? What factors enabled this customer to get up and running really quickly and effectively?
Yeah, absolutely. I'll take this one. I think it all starts right from the beginning. And I know we just talked about, building that business case. I think that's really the first start. So you have to build out that business case. You get everyone on board, and you have your executive steering committee, your sponsors. And from there, you really want to get the buy-in from all the different countries that you're working with, assuming that, on a global scale. And it's important that that each country has somebody such as a controller, for example, could kind of be the voice, because what you'll find on the global scale, right, is that every country might do things differently. Sure, their sales and procurement processes within their ERP might be somewhat similar, but they're going to have different processes really across the board. So getting them on board is absolutely critical. And then from there, you really want to start with I would say just having that standard like kickoff deck, right? So educate the different teams about the value that you're bringing and around the overall careful planning that will need to take this into consideration. So, I think about even just on the US side, we have compliance. All the countries have compliance, right? And they have timing. They have different times within the months where, your different resources are busy. So it's really careful planning around that to making sure that you can get them engaged, as well as, having somebody represent each and every one of those countries. So it gets really, really important, because at the end of the day, like what value are you really going to bring for these different countries, right? So we talked about rate rule content earlier on, right? So that's critical. That's going to help automate a lot of those manual processes that they were doing in the system. At the end of the day, it's also industry best practice. The scalability we talked about a little bit earlier, right? So as you start expanding different business units, start going across different countries, having centralized reporting capabilities, just so that you have a centralized tax department that can help run and manage a lot of this for you. So within your roadmap too is really, really critical. Understanding your roadmap should really tie into your company's overall roadmap. So perhaps there's a scenario where you might have, or deploying maybe like an Ariba or like a Coupa or another project, right? How does that align with your overall deployment of a global implementation? The other really important factors is how are you going to deploy? Most clients don't want to do the huge big bang, because it just creates too much of a risk on the sales and on the procurement side. So typically what we've seen is that you really want to kind of tackle region. So maybe you hit ANZ first, then you go to EMEA, APAC, LATAM. It really, really just depends at the end of the day. The other really, really important thing that I can't stress enough is really just around the master data. It's critical, right? Having clean registration numbers. How do you define your products and the services that you're selling? Having clean addresses, registration numbers. The list kind of really goes on and on, right? So really spending a lot of time understanding that and having sure that the data is actually cleansed, but then also what are those different use cases for each country? So when you start putting this all together, when you start putting together a requirements document, it's important to have a requirement document for each country at a minimum at each region. I recommend each country, because again, each country might have different use cases that they're going to solve for. And so once you kind of get that requirements, you then get into what I call as kind of that fit gap, which helps you understand, hey, what are the different data points that we have within our integration? What are we missing? How do we solve for this? And that helps you build up the design. It's really, really also really important to make sure that you have each and every one of these countries on board and aligned. So, and you can do that by having separate requirement documents for each country that they are responsible to sign off on. The same thing on the design as well. You have different designs for each country. They're engaged, they sign off on it, so that they're really aligned with you from the beginning to end.
And I can think of an example project that we've delivered recently where we did a global deployment of Vertex with an e-commerce platform, and it went I would consider it a successful implementation. One, they're still using the tax engine today. They're not having many issues where they're needing to reverse or dealing with a lot of customer complaints. Some of the factors that led to the success of that implementation and speed in which we were able to get up and running were just constant collaboration with cross-functional teams. So working with IT, the system team, the order to cash team, also working with the tax team. We also involved our global member firms to make sure that the tax technical requirements were defined and addressed appropriately, because some companies may have these, in a very organized and sophisticated fashion. A lot of companies do need help in this area, because even if you're doing it manually, there might be some areas of improvement in what you're doing today. So if you don't have clean, correct, detailed requirements defined at the beginning of the project, that's going to have a negative impact downstream throughout the rest of the implementation. So by being able to work with our member firms across 50 plus different countries, we were able to get this company who sells digital goods up and running on Vertex globally in the shortest period of time.
Thank you, Ray. That's amazing. Great to hear that. Great tips. So let's move into our second poll question. And again, for those here for the CPE, just a reminder, you need to complete 3 of the 4 polls to get the credit. So let's ask everyone, what's your biggest tax-related challenge? Is it manual processes, bad data, maybe incorrect tax calc, audits, returns and filing? Is it the shortage of tax professionals, maybe e-invoicing and new mandates, real-time filing requirements, or something else? So go ahead and put your answers in. We'll give everyone a few moments to do that, and then we'll see what everyone thinks. So let's go ahead and see what the results of this poll are. Wow, okay, interesting. So looks like bad data and incorrect tax calc was the #1 challenge, with manual processes coming in second. So panelists, any thoughts or commentary on these results?
Yeah, I mean, I think if you look at it, the manual processes and the bad data and incorrect tax calculation, I think are both, they're potentially related. I think the more manual processes you have in your tax management end-to-end process, the more likely you are to get outcomes that you're looking for. I think I'd actually be very keen to sit with anybody who responded to this poll and understand a little more context around, why those are the challenge areas, because those are challenge areas that I think Vertex is uniquely positioned to solve. And I think especially with help from our partners like Grant Thornton, we can work through areas to take away manual processes and to really try to bake accuracy into the end-to-end tax life cycle. So definitely would be completely open to connecting with anybody after the webcast here on so get some more details and context around that, because that's an area where Vertex wants to deliver robust solutions to our customers to help eliminate both of those things.
Absolutely. All right, thanks, Vince. Okay, so let's move on. Let's get into our next question. So just tying it back to what we talked about earlier about implementation, we talked about how to make an implementation succeed. So let's flip that and see, what are some typical challenges and gotchas from a poorly executed implementation? Grant Thornton, what do you guys think about this question?
Yeah, so just having gone through many implementations, you definitely build a list of what not to do, and you keep adding to the lessons learned as you encounter new scenarios. Some of the things, and we'll just go chronologically through the process. So the first thing you're going to start with is an evaluation. So you need to understand your own company's technology stack, systems for sales, systems for purchasing, what might be more of an ancillary system that's not material, and then confirm compatibility. So Vertex, connects with just about any system, and for the systems that don't, it'll require just a custom integration. But understanding that you need to use that custom integration is key, especially when you're setting the expectation with IT. You may be on a ERP version that's no longer supported. So it's important to realize that and think, okay, well, are we going to upgrade the ERP as we're going through this tax engine project, or do we need to do some sort of custom integration to our ERP because IT doesn't want to make any more investment in it. Also, when you're talking about, Vertex, you had several different deployments. So just making sure that you're upfront with your volumes and what areas you want to do business. So making sure if you have a need on both the sales and purchasing side, scope it in together, try and get it done, as phases in the same project. If you're sending millions of transactions to the system every day, maybe you need an edge deployment instead of a Vertex on-demand deployment. So just understanding what your requirements are, and companies like Vertex and Grant Thornton can help you in defining those, and then make sure that the plan that you're putting together to go forward is one that's going to set you up for success. The other thing we see is maybe it is working in silos. So when we talked about getting the right stakeholders involved, IT needs a seat at the table. They need to understand how this is going to impact the systems that they manage. And they also need to communicate what other projects are going on with IT, because if you're planning a go live and there's a production refresh, you're trying to push changes upstream. They're pushing changes downstream to refresh the environments. That can set you back a significant amount of time. You want to understand times where there's a production freeze and you can't move anything to production. You also want to understand all of the business processes. So, we're talking about AR and AP, so that could be order to cash and procure to pay. You also need to speak with master data. So understanding how this cross-functional team in an implementation works together in order to make sure everything is covered is critical to the success of an implementation. The other thing that we see a lot is when testing's not thorough enough. So if we go back to requirements, that's where you're going to define all the use cases and scenarios for a tax engine. So if you're talking about, you're saying, okay, we only sell goods, and then all of a sudden here's something you need to treat as digital goods or a service comes up later. That's going to be a huge issue if you're already in testing, because then you need to go back, define requirements, design how you're going to do it, and build and test. So making sure you get all the requirements up front and you're thoroughly testing every scenario is paramount to the success of the implementation. One thing we do is we have tools that can build thousands of test scenarios. So we test every combination of master data, customer, vendor, tax codes, because when we talk about global, the result, having the right result, amount wise isn't good enough. You need to pull in the right tax code to get the right message on the invoice and in reporting, so that one, it'll pass muster in an audit, and two, you'll be able to build your reports correctly for your returns, and then some of the more complex returns, like when you talk about like SAFT files.
That's great. Thank you, Ray. Great points. Definitely sounds like people need to use a holistic approach and just make sure they have all the stakeholders involved in the process. So let's move into our next question. So with automation and reducing manual processes, can you share suggestions for how tax teams can pivot to more revenue generating activities they'll be freed up to do? Any thoughts on that?
Yeah, I think there's a lot you can do. So when you reduce manual processes in general, it's just really going to just free up time for your overall tax team. So we talk about implementing a tax engine and how that can streamline a lot of your different processes and activities. So what can you do from that? What does that do? So I think of getting in front of what is your your steering committee, what's your overall roadmap from a company, what are those new different business initiatives that are going to be working on, and getting that table up front. So what we see a lot of times in different tax departments is that there always seem to be, and initially that historically I should say, would be like on the back end versus being on the front end. What I mean by that is they don't have that seat at the table to really drive that, the requirements, have that voice, if you will, from a tax perspective. And what ends up happening is they find out something about a new business initiative on the back end, and then they're kind of in like that cleanup mode, right? Where if they could be more on that forefront, they could actually generate and build, help drive those requirements. So that in turn saves a lot of pain points on the back end, which in turn creates a revenue generating activity. Think about it, right? It frees up time and makes things more seamless and allows you to continue to work on activities like that. So the other one is like maybe it's like credits and incentives. So now that you have like an automation in place, it's helping streamline processes. Now you free up your resources to go after some of those credits and incentives. Maybe the company's going to be building a new distribution center, like in a new economic zone. Being part of that, and making sure that you're part of that overall planning. You're working with whether it's the counties or the state or whatever it might be to get some of that revenue back into your company. Maybe it's like a data center. So there's a lot of like different data center activities that are going on. Where if you put your data center out there, you can file tax refund claims against that. So it's really around, you build that automation out, frees up activity to continue to work on these value-added activities.
That's great.
Yeah.
Thank you, Jason. Oh, go ahead. So were you about to jump in, Ray?
Yeah. So I wanted to add too. So, when we talked about the whole, save time, reduce risk, and find areas to reduce cost, that's really what you're going to rely on to maximize the ROI here. So a lot of companies, both in the US and abroad, will hire firms to come in and do what they would call a reverse audit or an input tax type refund project, where you're paying this company sometimes upwards of 25% of your input tax, or refunds they're finding on tax paid to vendor or over accruals. Having a well implemented and well maintained tax engine will allow you to reduce that money that's going out the door. Of course, those are still things you'll want to review either internally or have someone else review, but you won't be paying that money out in the magnitude that you're doing today. It also drives down when we talk about ROI, the cost for maintenance. So once you switch from a manual solution to a tax engine, typically the issues are fewer and far between, and the maintenance activities are not as significant, because when we're talking about rate and rule updates, that's going to come from the tax engine. There will still be maintenance that you'll need to do to adapt with your changing business, but that would be required no matter what your solution was. The other thing as far as a support strategy is just understand what kind of expertise is needed. So do you have that expertise on your team? Is that something that your IT can assist with? Or, do you need to loop in experts kind of in more of a co-sourcing model to help you when you run into significant issues in your integration? The other thing that I can't stress enough, a lot of the times I'll have a company approach me and say, we have tax engine X implemented and we hate it and it's awful and we want to get rid of it. A lot of the time, reasons why that happens is because configuration, if you implement it and never make any changes or health check or enhancements, it can grow stale. And when it grows stale, it may no longer be meeting your business needs. So doing a periodic review just to make sure you're up to date on all of your business requirements can really keep your ROI on the tax engine on Vertex very high. And also, make sure that you're not falling behind, what's being done in the market. Another thing I would say too is just understand that you're taking advantage of the latest and greatest technology. So, for example, with Vertex, I'm moving a lot of Vertex customers from L and Q series to O series or O series cloud. We're doing that because legacy software, that was great. many years ago, but now there's much better solutions, within the Vertex product family that can be deployed and really would maximize the benefit of using a tax engine. And the last thing I would say is that if there's a recurring issue and it's causing people a lot of pain, a lot of time, a lot of customer complaints, confront that issue in the integration. So whether that means you need to reach out to an expert or open up a ticket or dig into it, do that, because getting through those issues when you have an automated tax engine really gets you more towards how the solution should be used.
That's great. Thank you, Ray.
Mm-hmm.
All right, so we have about 10 minutes left. We're going to do 2 more quick poll questions back to back, and then we have one final discussion question for our panelists, and then hopefully we'll have a minute or 2 left, a couple minutes to do some live Q&A. So let's get into the next poll question. So what ERP are you currently using? Curious to find this out, because we talked a little bit about native ERP functionality earlier. You guys using SAP, Oracle, maybe Microsoft D365, NetSuite, Workday, a different ERP. So give everyone a moment. Go ahead, put your answers in, and then we'll see what everyone responded. What ERP are you using? All right, let's bring up the results and see what everyone said. Interesting. Okay, so it looks like most of the attendees today are using SAP, second place with Microsoft, and then some Oracle and some other. Excellent. Okay. Thanks everyone for answering that. So let's do one more poll here, and then we're gonna roll it back over to the panelists for our last discussion question. So what regions does your organization conduct business? So we're asking this question, obviously, talking about doing global implementations and working on a global scale. So are you guys transacting mostly in North America, United States, maybe over in Europe, EMEA, Latin America, Asia Pacific, or all over the world globally? All of the above. So go ahead and put your answers in. We're going to bring up the responses in just a moment. See where everyone is conducting their business. So let's see what everyone said. All right, looks like most folks on the call are working globally, followed by US North America, and a little bit of Europe. So great. All right, thank you everyone for responding. We completed the polls, so that is good. So let's go back to our panelists to bring us home. We have one more question to go. So how can customers develop a post-implementation support strategy that maximizes ROI? And I think Ray, you just talked a little bit about some of this, and maintaining your tax engine like a car and keeping that oil changed and just making sure all the data is up to snuff. So what else can help people maximize their ROI after they implement?
I think Ray actually really touched on it nicely in the previous discussion about making sure that you're using the right technology first. So that you're not on something that's 20 or 30 years old or whatever it may be, that you're on modern technology, and that you're maintaining your configuration the right way and keeping that top of mind. And I think that actually really is quite accurate. Is you want to make sure that you've implemented the right tools, and you've implemented them in the right way, and that you have actually scheduled time as part of your normal course of business to evaluate that. And I think there are certain things that Vertex has, Grant Thornton has, that you can take advantage of that really schedule in those check engine moments, so to speak, where you evaluate your configuration, you run a health check, you make sure that you've managed certain legislative complexity the right way, or you've dealt with a complex VAT scenario effectively. Because you can do things in a tax engine the wrong way, and you'll still get the right answer, but you're getting the right answer with a tremendous amount of effort. So part of what we always encourage our customers to think about is spending the time to occasionally review their configuration, occasionally review how they've managed complexity within the implementation to drive some of that complexity out and make sure that they're consistently following best practices on how you actually solve for some of those challenges. And there are services like health checks that are really tailored designed to support that and make sure that when you are solving a really complex business problem in a tax engine, you're you're solving it in a scalable way that's going to maximize your investment in the product. The other aspect of, I think, really driving ROI are using other tools in addition to a tax engine. So, there are a number of ways of kind of pairing your transaction data, like what you're selling, where you're selling, how that tax is being calculated, with your configuration, and understanding where there are opportunities to improve. So, Vertex, for instance, has some integrated analytics tool sets that will take your calc data and your calc configuration data and let you understand, where you might have some white spots, where you might have some opportunity to improve your configuration, or, certain things where you might want to consider, hey, maybe I didn't set up a tax driver that I should have set up. So it's really about using all of the different tools at your disposal to stay on top of your config, make sure that that config is as streamlined as it can be, and continue to maintain that at some fixed interval so that you're constantly asking yourself that question of, how can I drive complexity and time and cost out of this implementation by using a lot of those tools that are available and those services that are available to just make that part of how you maintain your implementation. If you do that, you're always going to be asking yourselves the right questions to drive that ROI and improve that ROI position over time.
Yeah, and the other thing I would add to that too is just make sure you're aware of what the latest and greatest is. So, if you have e-invoicing needs and you don't understand that there's a solution that can support that, you can reach out to Vertex. You can reach out if you have a service provider like Grant Thornton that can really help you with some of those things. The data analytics piece, e-invoicing, upgrading your tax engine, so that you don't have something that you hate that could be much, much better.
That's great.
Yeah, I think I was just going to add real quick too, just as you get to that newest and greatest and things are implemented and they're running smoothly, is just really making sure that you have, those right processes in place. So on the, whether it's on the procurement side and they're adding maybe new procurement categories or commodity codes or UNSPSC codes, or on the sales side, they're expanding your sales matrix and adding new SKUs, you need new tax drivers, right? And working closely with those teams. So there is a process in place that once those get created, that you're working with them to add those to the tax engine and get those mapped. You guys have that forefront on that review to make sure that things are going to be taxed correctly moving forward.
Excellent. Thank you, guys. Thanks, Jason. Thanks, Ray, Vince. All right, so that was our last discussion question. So I know we have a very limited time left to do some Q&A, so I'll encourage everyone to put questions into the Q&A box if you'd like, and we can pose those to the panelists, and then we'll close it out. I see one question in here. So this might be, I guess I'm going to direct this to Vince. So is Vertex applicable for all businesses or just for large enterprise? Like, who all can use Vertex?
Great question. I would say Vertex has solutions for all businesses. Effectively, what we've got is a set of capabilities that can, solve simple business problems or complex business problems. And we can really take the solutions we have and tailor it to your business need. So I think there's definitely a reputation that Vertex is the exclusive domain of the enterprise market. But I'd say that's actually something that that's true. We definitely support the enterprise market, but our technology and our solutions can be scaled to support basically any size business.
Great. I see another question here. This would be for the Grant Thornton team. So what are the main industry verticals that Grant Thornton supports?
So Grant Thornton is, we're focused on geography and industry as a firm strategy, but we really do work across many different industries. So if I think of just what we do from an implementation standpoint, a lot of manufacturing, services, fintech, software, retail, leasing, insurance. There is education, some non-for-profits as well. So we've worked across most of the main industries, construction, contracting. So there's typically not an industry that we won't support. And our resources do have a nice spread of experience across multiple industries. industries.
Fantastic. All right. Well, thank you, everyone. I guess that's just about all we have time for today. Really appreciate Vince, Ray, Jason, you guys being here with us. Before we wrap this up, just some quick housekeeping. So just as a reminder, anyone interested in the CPE credit, just click the Apple icon on your resources tab. Provided that you've met the CPE requirements, you should be able to print and view your certificates. As I had mentioned earlier, we're doing a short survey, which is going to appear on the screen as soon as we close the webinar. We would love to get your feedback to help us plan for future webinars. So everyone that completes the survey will be entered to win a $50 gift card just in time for holiday shopping. Last thing, as Vince alluded to, if anyone is further interested in, needs further info about Vertex or would like to connect with us anymore, just click the call to action or demo button on your console and one of our representatives will be in touch. So that's about it. We really appreciate everyone's time today. So thank you for attending and look forward to seeing you again at upcoming Vertex webinars. Enjoy the rest of your day. Thank you, everyone.
Thank you.
Thank you.
Thanks, everyone.